Hey folks, my name is Eric Wilkinson. Some of you might recognize me as the Wolfman. I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data across the pond. Nothing to see there, to be quite honest. Then we move back over here to the United States, and we got University of Michigan consumer sentiment coming in at 98.4, and the University of Michigan inflation expectations coming in at 2.6%, in line pretty much with expectations. And then we have Bullard speaking right now, and Rosengreen a little bit later on today. Something to note yesterday. Big news, really. A lot of these Fed governors coming to the consensus that they are going to cut rates at the July meeting. That's this month. Now, I've been talking about it. I think the economy is moving along finally at a decent clip. It's not a boom or bust type situation. It could go to the boom and then we see the bust, but that's why I want to stay away from this, is the market is kind of moving along nicely. Global economies may be doing a little bit worse than we are here in the United States, but that isn't something that should determine our Fed policy. All right, that's what they're talking about anyway. Let's get on to the overall markets. We've got crude oil just slightly in negative territory. Yesterday, remember, I threw up this little line here that it's not, in correlation to anything other than it looked like that's where we were finding support several times. If you draw this line all the way out to here even, I put that in there yesterday. We peeled through that like it was butter. That's creating that situation where we've talked about higher highs and higher lows. Well, this little bit of a move here has completely negated that. We have broken that pattern, so that bullish move is over with at this point. Looks like we are going to go back down to that $2.50 that I've been talking about. As soon as I kind of write that off, it looks like we are right back into it. So $2.50, or sorry, $52.50 oil is good. That brings us below $3 basically on a national average for gasoline per gallon. All right, we've got gold moving higher again today by about $2.50. Yesterday, after we broke out of that little triangle we've been talking about for quite some time now, right? I mean, as soon as I started pulling up this triangle, we talked about how it was creating more of a flag pattern, which generally shows that there's some pent up energy. It's like that winding up of a rubber band. And then once we broke out of that area right there, you can see the market just spiked to the upside. Basically, that was, everybody was starting to look at that pattern set up. And once we broke above that, the shorts really scrambled to cover, taking us up to that 61.8 Fibonacci, which lines up with 1454 or 1450 quite nicely. Peeled above it. Yesterday we tested it. Today we blew above that right off the bat, but now we're seeing the market come back off again. And that is looking very much like an engulfing pattern going on with gold futures. That, remember, I have GDXJ in my portfolio. Well, I dumped out of it yesterday when we started breaking out. I talked about it when we were looking at this area here. We had broken out a little bit, but it looked like we were trying to curl back down into this lower area and maybe back into that triangle that I started drawing. So I kind of stayed away from it. But once we started breaking above Wednesday's high, that's when I pulled the ripcord on this. I was like, all right, Fed governors are talking about lowering interest rates. That's easy money. That's inflationary. That, if we have an inflationary environment, creates a situation where the gold bugs come out in force, and that's what I started getting nervous with and decided to cover that. We'll talk about that a little bit later on here in the market commentary, but right now let's move on to the bonds. Bonds are coming off a little bit. Yesterday, you can see with that talk, as soon as they started saying we are looking to cut rates in July, we started getting some buoyancy in the bonds. But then it started looking like, well, it's only going to be maybe like a 25 basis point cut. That's when everything kind of started mellowing a little bit. All right, we've got the VIX still in the 13 handle, but you can see when that whole information came out about the Fed governors talking about lowering interest rates, we saw the VIX start to go down. That's because the equity started rallying. We saw gold start to get a little bit of a boost. Crude oil was kind of lagging a little bit. We would expect with a weaker dollar that should drive crude oil prices higher, but we didn't really see that. We saw the dollar getting spanked yesterday as well. So a lot of those levers and pulleys were in the market yesterday after we did our market commentary. All right, Dow Jones Industrial Average up about 65 points, creating a nice little bottom here that you can see when we talk about those bottoms where we get a chart set up. You know, this is called a, oops, I guess I'm going to kind of build some kind of crazy, probably worked out better the way that I did it the other way. Anyway, we got, this is what we usually call a hangman doji, right at the bottom of a move. We've got confirmation with that chart set up. So it looks like the markets are ready to start moving higher. They're going to celebrate lowering interest rates. So all of these overnight highs, remember the Dow Jones is an index, so that's not an overnight high, but we flip over here to the Nasdaq and we can see that that 8,000 was printed overnight and never got printed during the day. Looks like that's probably going to be something that is a target, and we're going to probably even rally even higher than that. 8,100 is probably almost the next sure thing. 8,165 is my Fibonacci extensions, so that is probably where we will start migrating to and try and print that 8,000 in the day session. Maybe not today, but probably next week. And similarly with the E-mini S&Ps, this is an overnight high that needs to be printed during the day session. We've got a nice big bullish move from yesterday off of the talk with the Fed governors lowering interest rates. That is a bullish move. I think that the markets are going to continue higher with that news. I think we probably would have printed that anyway, but it's almost a sure thing now. Looking at this daily chart of the E-mini S&Ps and breaking it down to 30-minute candles, you can see the gray section is the overnight. The day session is the black area. This is where I was talking about. We printed that overnight high there. That is probably going to be a target for the day session. Now you could say, Wolfman, I don't know if you're really on this. Well, overnight inventory could be considered relatively neutral right in this area because the longs got flushed out by the overnight as well, and then they really rallied to the highs of the open, and from that open we're flushing out those overnight inventory, which actually was overnight long, and they're flushing those guys out. Interesting enough that we come down and tested the overnight low, so that's been printed during the day session as well. So that full range basically printed in the day session. It's not giving us a whole lot of guidance, but I believe that with the Fed talking a little bit more dovish, and the overall arching theme is that the global economies are starting to slow, we're going to ramp it up here in the United States to try and make up for that, it looks like. So we could start seeing highs continuing to come in. Now, GDXJ, I puked out of this yesterday. As soon as we started getting that rally, like I talked about, the gold started coming up. It looked like the markets were going to start really blasting higher. And GDXJ, I went into the July, which expired today, and I had sold the, let me just double check this. It was the 34 calls. I had sold the July 34 calls in there for 38 cents, and I ended up buying those back for $4.10 yesterday on that rally. So pretty big loser there. Not really happy about it, but I'm out. Today we're starting to get that correction down. It's still not back to where I got out, so I'm happy that I dumped it. So I'm good with that one. And then the other thing to talk about was XLK. XLK is in this trending upward trajectory. I was expecting us to really start to break down and at least test the low of this trend channel. Doesn't look like it's going to happen, so I got a pretty itchy trigger finger on that as well. So probably looking to cover XLK sometime soon. It's not a terrible loser right now, but just not really happy with my overall position. I'm pretty much negative deltas, so I'm going to try and add some more positive deltas and cover some of those negative deltas for this assumption now that with easy policy we could start seeing these equities get a little carried away to the upside. So I don't want to be a part of being short in that kind of environment. So I'm going to be watching that very closely. That's about all I got for you guys today. I hope you guys all have a great weekend. Next weekend is going to be a little bit interesting. I'm going to be heading to California. I will still be doing the daily market commentaries, and we will still have a webinar on Thursday because I'll be back by then. But first couple of days, I'm going to be taking my computer with me and trading from the beach. All right, so check it out at Pro Trader Strategies. Also, give us a like on Facebook so that you can get first access to these videos. If you can't take that, take it easy.